All right, over the last few years, myself and the guys at Savvy have raised over $400 million. And if there's one thing that I've learned, it's how to sell investors on a deal. The reality is I use this exact same process I'm about to break down for you guys to close $7 million just last week and get 3 term sheets on $150 million back in the last summer, and to bring in a pipe deal for $125 million in, I think it was October. Point is, this process works. It's vetted, and I've also taken it from guys like my advisor, Jakob, who's done over $80 billion in transactions. So don't take my word for it, take his. What I'm going to break down for you today is exactly how you can close capital for clients as a broker or as an investment banker. As always, you should have the correct licensing to be able to do this kind of thing. Do not do it without the correct licensing. I don't want to hear that you heard that I said it was okay, because it's not. Okay? Make sure you are licensed if you are going to be brokering these types of deals. I would say that this framework would work for brokering almost any deal that is above $1 million in size. I'm going to break it down for you step by step right now, so let's get into it. As with any sales process, the most important part of this process is maintaining frame. You need to prove to the other parties on the call that you not only deserve a seat at the table, but that they're lucky if they get to work with you. This means that you must own the conversation. So when you're having these conversations on behalf of an issuer and brokering these deals, as is the example that I'm giving today, you want to make sure you're in there in a broker capacity. You want to find out about what their mandate is, and then you'll give a little bit more background on the client. Always start by having them give a little background on themselves. What will oftentimes happen is that if you have a client pitch for themselves, they are not familiar with the sales process. Even if you aren't familiar with this sales process, if you're watching this, you probably engaged in some sort of sales process before, which puts you ahead of a lot of founders, a lot of CEOs, a lot of management teams. And so generally, if I'm trying to close a deal, I will take the meetings myself and then bring the actual client in on later calls. Remember, first point of frame, ask the investor, in this case, what they do and what their mandate is, and a little bit of background about themselves. Get them to open up. Follow up with a little bit of background about who you are as a broker, and then I would hop into the meat and potatoes of the deal. By starting the call off with asking the questions about the opposing party, you are establishing frame right away, and that's what you want to do. You want to let them know you're serious, you're not going to waste your time or theirs, and that you want to get a better idea for who they are as a potential investor to start with. You could say something like, look, so if it's cool with you guys, I've got a handful of other investor meetings today, or I've got meetings with other sponsors, and I'd like to start this call off by finding out a little bit more information on you guys, your fund, and what you guys like to allocate into, and some stuff that you might have done in the past. Perfect way to start the call. Now, the other part of this is that before you get on the call with the client, I would remind the client, hey, don't worry, I'll handle the pitching. I've been on calls with other bankers before where they'll let the client ramble on. Definitely give them the advice, sit them down prior to the call, and give them a little bit of a high level on what you'll be doing, and then also let them know that you will turn the attention to them for any technical questions that might come up during the call, but only for technical questions, and they must keep what they have to say succinct as possible. This is all about summation. You are not getting into the nitty-gritty of the deal as little as possible on this first call, especially because what you're really going to do is have them go through the data room, read the additional materials, and in doing so, they will have to sign an NDA and get into the data room, which allows you to have them kind of take a next step into the deal. You do want, obviously, to make sure that the deal is going to be to some degree a fit for them based on their mandate, based on their check size, based on where they allocate, all that kind of stuff. You want to keep the information given to as high level and as critical of information as possible so that you can save yourself the time of a long conversation about nothing and them the time of being engaged and having to sit through a call when they're not going to invest. It's a waste of everybody's time. Now, how to actually pitch the investor. The pitch is effectively 3-parted, okay? I'm gonna break those down for you. Number 1 is high level on the deal. You wanna keep your pitch as brief as possible. What does the company do? What's the revenue numbers for the company? How much in assets does the company have? What's the growth rate of the company? What are they going to be doing next year? Only the things that really matter for the investor to actually make a decision. What other traction do they have? What contracts do they have? have, what's the accounts receivable that they have. You want to keep this as succinct as possible, but make sure that you're telling the investor all of the critical information that they're going to need to ultimately make a decision. You're also going to want to give maybe 1 or 2 sentences about the founders, about their background. What experience do they have? Why would they be somebody worth investing in? All of that kind of stuff. Part 2 of this is making sure that you present without pulling up a deck. Do not pull up a deck unless you are referencing 1 page in there. Far too often, clients will get on calls, issuers are getting on calls, and they're going through their entire deck start to finish. That's boring. Nobody cares. If they want to know that information, they'll go through the deck on their own time and they'll read through it. You should be keeping this as high level as possible and keep it like a conversation, okay? You want to do as little actual intricate details through a deck as possible, and that's boring. They're not going to listen to that. Number 3 is that you need to remember you are important. You are the one in control of the situation here, and you are the one setting up following meetings. You're the gatekeeper to the issuer, all of this kind of stuff. You need to make sure that you retain frame at all times because these investors, they're big guys. You know, if you have $1 billion or $3 billion of assets under management and you're talking to some pipsqueak, you will run them over. And even if you like the deal, then you're going to think to yourself, I could probably squeeze them for a really good valuation. You want to represent your client well and represent yourself well. Another large part of this is FOMO and urgency. A lot of brokers don't do this. They don't take advantage of this because they haven't sold before. They don't understand how sales works necessarily. They've only worked in kind of an institutional or corporate environment. Let me break this down for you. The best thing that you can do is drive FOMO and drive urgency to these institutional investors. These guys will make a deal quickly, especially if they feel like there are other parties that are interested. I would obviously never recommend lying. Don't lie. That's a waste of everybody's time. But if you're running a campaign, you probably have a lot of interest in that client. I would let them know we have a lot of interest in this client. You want to also push for, hey, when do you think we can see a term sheet? Hey, we're waiting on terms from other prospective investors. When can we expect something from you? What are your guys' timelines to terms generally like? If you can bring up terms multiple times throughout the meeting, then that's sticking in their head. And in order to get to a final deal, you need term sheets in place. Otherwise, that's not going to happen. As always, people will only give you what you ask for. So by bringing this up multiple times throughout the call in kind of a relaxed manner, you will end up getting what you want, and they will have in their mind, okay, here's the end goal. If I'm not going to get to that end goal, I should just remove myself from the race early. The sales process with these kinds of deals is just as much about who is not a fit for it as it is who is a fit for it. And you do not want to waste your time on who is not a fit for it. So by getting this end point in their mind and making it clear that you're not here just for a chat, it makes it so that you will get rid of anybody who's not a seriously interested party very, very quickly. If you do not bring up terms at the earlier stages of these calls, I can pretty well guarantee you that you will not end up seeing terms. Anytime I have seen terms or closed a deal, it has been front of my mind, and by way of me telling them, front of the investor's mind, that we are going to get to terms. That is the end goal here. So if you don't do it, you're not going to succeed. That's just the reality. As always, the follow-up game is so important here. So during the transaction that we recently closed, $7 million, 2 months, 60 days, literally. Started the campaign February 3rd, received both signatures from the lender and from our client on April 11th. So from February 3rd to April 11th, which is roughly 60 days, we managed to close this thing. But it's only because we did all of the other things I've talked about, but also because the follow-up game was so strong. We kept a sheet with every single person that we had met with. We also have a CRM that has every single person that we've met with on each and every file. So by having that information there, we were able to go in and actually consistently follow up, keep notes on who we've talked to, keep notes on where the progress is with them. You need to be doing that follow-up, lightly doing touch points and making sure that they know that you're looking for terms. You're trying to get this thing closed. What's the deal here? Are you in or are you out? I've seen guys let deals go for years, literally for a year and a half, when the deal should have been closed in 3 or 4 months. Not because they didn't have the interest, not because they weren't going back and forth about verbal terms, but because they weren't closing. They weren't doing the follow-up. They weren't condensing that period of time by doing the follow-up. Now, another part of that follow-up that's just as important is setting follow-up calls. If you don't have that follow-up in there, you're going to lose them. And what I would even say is like, hey, let's do Friday at the same time. I'll just put a placeholder in for now. You're telling them. You're not asking, you're telling them. And they're not going to object. Why would they object? If you've made it to the end of the meeting, you've done all the other things I've told you, then they're still a good fit for the deal. A chance that they're going to invest in it. And if they're there and they've agreed for data room to be sent and for NDAs to be signed, then they're probably looking to go further into the deal. So you might as well have a follow-up call. You're not harming the investor. You're not harming yourself. You're only going to win by doing this. And remember, out of sight, out of mind. So if you don't get that appointment in there and that appointment isn't scheduled during the meeting or immediately afterwards, you might as well have lost the investor. They're going to be off on their own tangent. You got to remember, these guys are seeing 30, 50, 100 deals a week. If you are not top of mind, somebody else will be. Additionally, send them the NDA over the minute the meeting is over. And remember, during the meeting, whenever they're asking you questions about the issuer and maybe they're asking technical questions that you don't know the answer to, perfect time. Hey, don't worry, that's in the data room. I'll send you the NDA over after the call. So that's another thing you need to be saying, NDA during the meeting, so that they know after the meeting, you're going to send them an NDA, they're going to go into the data room, and they're going to learn more about the file. Crucial information. Number 7 is maintain a hit list. Always have a short list available to you of guys, where they're at in the process, and how the conversations have been going, when the next meeting is booked. Have they gone through the data room? Are they in the middle of writing terms? Are they going to be writing terms? Are we expecting terms from them? Where are they at? You need to have that short list. That is going to be your North Star. That's how you collect 5-6 term sheets like we did in a 60-day period, is by having that short list, staying on top of everybody, conducting the follow-up to those people, and always knowing where everybody is at. If you fail to plan, you plan to fail. Something else to remember is that after you've had these meetings, after they go through the data room, they're going to have questions for you. You'll be going back and forth, but it's important to remind them, hey, we're expecting terms from other parties. When do you think that you can get yours over? Remember, you're just sprinkling the stuff in so that's top of their mind. Necessary. Step 8 is the most important part, closing it out. Given that you've followed all of these steps and you've done outreach like we teach you in capital advisory, then you should have 2 to 5 term sheets at this point. You should be sitting on some term sheets for people. And the deal's good. Obviously, the deal needs to be good in order for any of this to work. What you can start doing is pitting the investors against one another. So I would redact the different term sheets that you have, get your assistant to redact them, or just remove names, okay? But keep the terms in place. And you can use these as leverage against each lender. So if there's things, or each equity sponsor. So if there's things that you don't like in the various term sheets, well, you're going to sort it out pretty quickly, aren't you? Because these guys are going to start working against each other. And you've created the FOMO and the urgency throughout the process so that they're not only really interested in the deal, but they're aware that there's other parties involved and they want to win. Of course, these guys want to win. Everybody wants to win. So use those various term sheets as leverage. This is a game of negotiation, so know your limits and play within them. If you've only received 2 term sheets or 1 term sheet, even if it's 2, I wouldn't go back asking for crazy better terms, okay? You can go back, try and get whatever is better for the client, obviously, but at the end of the day, beggars can't be choosers. So if you're not dealing with a whole lot of term sheets, you might just have to accept what you get. Now, you've dealt with the investor. The client is going to be the other part of this equation. It's their business. They want it to be valued as high as possible. They want to get the best possible terms, and you should want all of that stuff for them as well. But what is realistic, what they can get in terms of the debt facility, what they can be valued at for an equity raise, how their collateral shakes out, what is actually valuable, what isn't. All of this kind of stuff is stuff that you'll learn through this process, because investors and debt sponsors will be telling you, yeah, well, this isn't really worth anything, or, I have a problem with this asset, it's kind of shaky, or whatever, right? You'll start to have an idea of where the market sits on the deal, and you should use that intel that you've learned from running this campaign to speak to the client and give them the reality of the situation. If they're waiting for $15 million in debt, but they only have a large enough borrowing base for $7 million, you can't fake the math. There's reality and then there's what the client might want. And so somewhere in the middle, you need to get them to so that you can get the other signature on that term sheet. You need both of them in order for you to close the deal. So you need to work both angles of that situation. Now remember, you are acting on behalf of the issuer. You're also acting in the best interests of the investor, right? You have a duty to both of them as a broker. So you need to be weighing this out, making sure that you don't lean one way or lean another way or do something that's negative for the client. You only want to be doing, obviously, what's in the best interest of the client in terms of valuation, in terms of dollars amount. But as I said, you need them to have a touch of reality here. Now, this last point is something to do if you get on one of these investor calls and you get to the end of the call and they say, well, it's not a fit for us. Fine, no problem. Do you know 2 or 3 other people who this might be a good fit for? And 9 times out of 10, almost 10 times out of 10, they will have a handful of names to give you. I had one of my MDs do this. The guy sent him a list of 60 names. 60. He booked 25 different meetings from that list of 60, all because he asked the guy, hey, is there anybody else that could be interested in this? So don't miss out on this. And in my experience, I found that at minimum, these guys are going to give you 3 additional parties you can go speak to, and now you're coming to them as a reference. So your frame and your positioning and everything is fantastic. It couldn't possibly be better. You're coming from a trusted source. Definitely remember to do that if and when the client says no. Even when they say no, the game is not over. Continue to try and get the most out of the situation that you possibly can. All right, if you guys like these kinds of videos, because I don't often do targeted financial videos like this, but if you like them, let me know in the comments. This is a part of the Capital Advisory course as well. I'll be putting it in there for those guys. So if you guys have interest in becoming a licensed broker, in setting up your own investment bank, I'm your guy. Go down below to the description, click on capitaladvisory.io and sign up for a call. As always, I'm Alex Astry, and this is how to make your first million.